Good morning, everybody. My name is Mirakian, Head of National Accounts at Pepper Money. I'm delighted to present to you our very first Pepper webinar, which will formulate part of a fortnightly series of webinars that will hopefully provide you information as to the market and how we as broker partners can really embrace the opportunities that are ahead of us. The first webinar is entitled Exploring the Adverse Credit Market and the Impact that the pandemic COVID-19 is likely to have on borrowers. Today I would like to discuss this segment of the mortgage market, which in my opinion is not discussed enough, but one where a significant pool of borrowers do fall. And with the pandemic upon us, this segment is one which intermediaries cannot ill afford to ignore, particularly now when customers who may have been in the mainstream find themselves falling into this specialist category. So the purpose of this session will be to look at what is the adverse credit market, understanding how, where and when people are likely to be affected. What does the future hold for the adverse borrower post-COVID-19? What do brokers need to know? And what new opportunities are there for our broker partners? And how can Pepper Money help? If we start off by looking at what constitutes an adverse customer. So there can be many reasons for a customer becoming known as a customer with adverse, but ultimately it means those customers that fall into the category of not being able to get finance from a mainstream lender. Adverse in this context usually means a poor credit record, such as CCJs, defaults, mispayments on credit, bankruptcy, or an ongoing or previous arrangement with creditors, be that arrangement formal or informal in nature. However, this does not mean that the customer is a bad person, nor is it necessarily an indication of future delinquency. Invariably, a large proportion of customers who arrive at an adverse lender do so in good faith and often turn out to be very good borrowers indeed. Sometimes it is just that the customer's situation or circumstances do not fit prime products, or they have experienced short-term issues in the past, such as loss of earnings, divorce, illness, or bereavement, that affected their ability to service debts, and we will touch on this a little bit later on. So how big is the adverse credit market? Let's size up this opportunity. So last autumn, Pepper Money commissioned YouGov to carry out one of the largest and most in-depth studies into adverse credit mortgages that the market had ever seen. We then carried out research at the start of this year to see if there were any changing dynamics using a representative sample of more than 4,000 adults. Based on YouGov's findings, it was estimated that there are 1.34 million people in the UK with adverse credit who are looking to buy a property in the next 12 months. 15% of all these participants have had mispayments on their credit commitments, have had CCJs, defaults, secured or unsecured arrears registered on their credit file, or have entered a debt management plan in the last 3 years. Based on the latest ONS projection for the UK adult population of 52.4 million, this means we can actually estimate the number of people considered to have adverse credit to be 7.86 million. Putting this number in context of the mortgage market, of these 7.86 million people with adverse credit in the last 3 years, means that 17% say that they intend to purchase a property to live in, to be specific 11%, or to let out, of which that part of the population is 6% in the next 12 months. This equates to 1.34 million potential mortgage customers with adverse credit who may need the support of a broker in the next 12 months. That's 80,000 more customers since our first research paper last year, which evidences this type of borrower is growing and needing our financial expertise and support. Now, in our research, we tried to understand this adverse credit borrower a little bit more. The conclusion we ultimately drew was that adverse credit affects people from every area of society. Regardless of gender, age, or being associated with higher or lower income, anyone can find themselves with adverse credit. If we look at the slide on the graph on the left-hand side, we can see that missed payments are certainly the most common form of adverse credit, with 76% of participants having missed a payment in the last 3 years. Nearly a third, 31%, have had defaults, and a quarter have been in a debt management plan. Just over 1 in 5 respondents have received 1 or more CCJs. Moving on to the age pie chart, adverse credit is known to become most common amongst people who are the prime age to be home buyers and remortgages. The majority of people aged between 35 to 44 years. Of those surveyed, 44% of 35 to 44-year-olds and 45 to 54-year-olds had missed more than 1 credit payment, and it's those aged 35 to 44 who are most likely to have current debt of more than £15,000. If we look at the social grade chart, we see that the majority of adults to have experienced adverse credit in the last 3 years are from the more affluent ABC1 social grade, as opposed to the less affluent C2DE social grade. So it's not just those who are less affluent who pick up adverse credit on their record. And finally, in the last diagram, women appear to be holding more debt than men. Oh dear, ladies, this stat does not bode well when trying to convince my partner I don't have a spending habit. So some really interesting stats, I think. So is there a cause or trigger that causes a customer to get themselves in financial difficulty? So the conclusion we drew, which falls very much in line with Step Changes Charity, is that for many people, financial difficulties are actually triggered by life events. Life events can trigger a spiral of financial difficulties that drags people into problem debt. And when I talk about life changes, it is such as losing your job or having your hours cut, splitting up with a partner, falling ill, or becoming a carer, which are very common reasons. Step Change Debt Charity go as far as to say that they believe that nearly half of the population will be affected by some sort of life event, or at least have someone in their household who is affected within a couple of years cycle. So it does show that it impacts a wide number of us in this. So even though adverse credit is by no means uncommon, as we've kind of alluded to in the previous slides, consumer understanding is limited. And the research tells us that 70% of adults with adverse credit in the last 3 years who are looking to purchase a property in the next 12 months with a mortgage are actually concerned about having their mortgage application declined due to their credit history. However, what's really interesting is that only 13% of homeowners who had experienced adverse credit before buying their current property say that adverse credit resulted in a declined mortgage application. So what this clearly shows is that there is a significant perception gap between the number of people who believe that adverse credit will result in a declined mortgage application and the number of people for whom this has actually been the case. This misconception about the impact of adverse credit on the ability to successfully apply for a mortgage is also demonstrated by incorrect attitudes to the impact of a CCJ. If we look at this diagram, 26% of people surveyed thought that they would have to wait longer than 5 years to apply for a mortgage after being registered with a CCJ. 92% of people didn't actually know that they could get a mortgage with a CCJ registered as recently as 6 months ago, when the reality is that there are lenders out there who can help, and at very competitive rates. So when it comes to missed payments and CCJs, most people believe that they can only get a CCJ if they miss more than 1 payment, and 93% are not aware that just 1 missed credit payment could lead to a CCJ. 2/3 don't know that there is no minimum amount of debt required to be issued with a CCJ, so highlighting the need to educate people in this area. Although being in debt may reduce the chances of getting a mortgage, if potential borrowers are able to show they have their finances back on track and will be able to afford mortgage repayments, having had missed payments, CCJs and defaults, this shouldn't stop them. So what this shows is consumer understanding is limited despite adverse credit being widespread and lenders having the flexibility to lend. I'm pleased to say, though, last year the FCA did report that over 4,000 borrowers were helped. Regional variances certainly seen, with those in the northwest helped the most and those in Scotland the least, but there are so many more borrowers to help. So the conclusion I would draw so far: anyone can experience adverse credit. It's simply an unfortunate fact of modern life, and there is an opportunity to help even more borrowers than ever before. And brokers, we really need your help. So the next question we wanted to know at Pepper Money was, do borrowers with impaired credit reach out to their mortgage brokers for mortgage advice? And actually, it was really interesting. The answer was mixed. People are actually more likely to seek advice from family and friends than a mortgage broker, so education is certainly needed. Awareness of mortgage brokers is relatively good. 4 in 10 people with adverse credit who are looking to buy a property in the next 12 months say they would speak to a broker. However, more people, at 44%, say they would go directly to their bank, and even more, at 58%, would seek advice from their family and friends. When it comes to finding a broker, 49% said that they would use online research to identify the right advisor to meet their requirements. So if I could give you a couple of tips based on this today, it would be, number 1, if you have a website, update it. Let customers know what situations you can deal with. You are the expert. You know all the lenders that are out there, what their criteria are, and actually you've been able to help so many customers than ever before. Maybe even get a logo of Step Change Debt Charity on there to highlight that you can help such customers. Point 2, let family and friends know your services, as well as keep in contact with your existing customer base. They may not need you right this minute, but they may need you later. So as we know, the pandemic has had a huge impact to society. With that, I've been asked the question over the last few weeks, post-lockdown, do I think there'll be an adverse market to help borrowers? Now, what I say is yes. In fact, I see the segment of the market growing, as will the entire specialist sector, as a lot of people's circumstances will have changed as a result from COVID-19. Whether that be a change in employment status, such as being placed on furlough, reduced working hours, redundancy, or even simply having to change where and how to work. We know that some of the impact on us as a nation has been tough, with 1.8 million borrowers already having obtained mortgage payment holidays, which equates to 1 in 7 borrowers. And Knowledge Bank's sourcing system showed that their most searched terms during March included terms such as defaults registered in the past 3 years. Now, I don't personally think we will see a rise in CCJs and major defaults, as customers are protected during this time, like through payment holidays, frozen charges, and rates on lending are very low. What we'll absolutely see, though, is an increase in the little adverse, such as missed payments on unsecured credit cards. So adding to the 76% statistic we saw in an earlier slide, small blips as opposed to the bigger defaults. More applications will as a result get more complicated and will play in the strength of a broker's hand. Our job, therefore, now is to educate customers that we as brokers are financial experts and can help, and to raise awareness that if these customers are in financial difficulty, to not be shy, to not be afraid, and to reach out, as brokers know the market and can get them a mortgage by one of the many mortgage lenders that are out there who can help, and then take all away that worry and pain that they may be going through. So what I would also highlight, without sounding doom and gloom, is that the impact of COVID-19, in my opinion again, has not yet been truly felt. I think the pandemic impact will be felt post-government support, and that's what, as brokers and lenders, we should be preparing for. Preparing our business plans for the next 12 months of how we can support these customers. So starting the awareness piece now. So will lenders be able to support the lend? Well, the answer is simply yes. Specialist lenders will, yes. We want to lend, albeit we will all have various lending criteria and risk appetites. So what I would say with that is that brokers can anticipate more red tape than usual. Borrowers may be asked to verify employment closer to their completion date, or to make sure documents which verify their income are more current. Underwriting is more complex in the current market because whilst we want to make sure we're able to provide customers with the mortgages they need, we have to assess their income and employment in more detail. Affordability, for example, has certainly taken on a new meaning. It has been at the forefront of any lending decision, particularly since the financial crisis of 2008. But since COVID-19, it has taken on another level. We have started to ask more questions, not only looking at long-term income and expenditure, but also reviewing short-term affordability. Will that customer be able to make their first mortgage payment? If I can give you any tips, when submitting any mortgage application with a borrower with adverse credit, I would try and build a picture of that customer for the underwriter. If your client has a number of CCJs and defaults, don't write off their chances for a mortgage, but make sure you communicate their story clearly to the lender so that any decision can be based on full and accurate information. Find out if there is a valid reason why a borrower experienced financial difficulty, mainstream misses in the past, and can the lender now have confidence that these issues are unlikely to be repeated in the future? If there is a coherent story and good rationale for your borrower's situation, there is no reason why a specialist lender should not consider their case. We do look at each case on a case-by-case basis, and that is the beauty of our manual underwriting. Also factor in more recent activity. What does a credit report look like over the last 12 to 18 months? How many of those blips have been fully resolved, and what was the timescale in dealing with them? Are they really larger scale credit issues, or are they just aberrations that many people pick up, often without actually knowing what has happened? The more information you can add, the easier it will be to assist your borrower. So what can you do to embrace this market? So I would continue to embrace technology because I think technology will be an enabler to do more business, particularly over lockdown. Be virtual smart. Speak to as many of your existing customer base as you possibly can, because as I alluded to earlier, if they are aware of the services, they may not need you right now, but they'll know who they can turn to at the hour of need. Market yourself, use social media more, making customers aware of just the services you can offer. And if you don't know about this sector, don't be afraid, do not be shy, reach out for help. There are so many lenders, so many distributors out there who can really help you understand this market and actually open up an opportunity for you to help more customers more than ever before. And just to round off, Pepper Money are here to help. We really do understand the adverse borrower. We understand how customers' adverse credit and complex circumstances can make it really difficult for them to get a mortgage application. We know when it comes to adverse credit cases, broker partners can also be particularly dissatisfied with the speed to process applications through to offer, which is why a lot of work is continually undertaken at Pepper Money to improve the broker journey so it is seamless. And our online mortgage application process, along with the ID, is simple to help you determine the maximum loan amount a customer may have. And just to round off, Pepper Money are here to help. We really do understand the adverse borrower. We understand how customers' adverse credit and complex circumstances can make it really difficult for them to get a mortgage application. We know when it comes to adverse credit cases, broker partners can also be particularly dissatisfied with the speed to process applications through to offer, which is why a lot of work is continually undertaken at Pepper Money to improve the broker journey so it is seamless. And our online mortgage application process, along with the ID, is simple to help you determine the maximum loan amount a customer may have. And finally, just going to go through a case study of where we've helped a customer in the past. So let's look at Adam with impaired credit. So his background was that he was setting up his own plumbing business. Although he never struggled to find work, a series of late and unpaid invoices in the business's infancy left him struggling to pay his own bills, and his credit report was littered with missed payments and eventually a default. So the problem Adam was facing was that although Adam's business was growing through lucrative contracts that were quite some distance from his current home, he was keen to move. And he was disappointed to find that his current lender was unable to even consider an application from him due to his credit history issues. The solution was that he came to Pepper Money, and our underwriter looked at his case, really understood the circumstances and Adam's financial difficulties and what his difficulties were in the past, but he could also see that his business was thriving. So despite the default 13 months ago, we were able to provide him a Pepper mortgage, enabling Adam to secure his new home. So I hope that case study gave you a flavour of the type of customer we are able to help. But do we do what we say we do? I thought it was important to show some quotes from broker partners who have used us in the past. We love keeping all your testimonials and all your feedback, because this is the only way that we can really understand how we are helping, but also how we can improve. But I'm hoping these testimonials are real testament to actually our ambition to support those customers with complex circumstances and the adverse credit market. So in summary, the adverse market is growing and will continue to grow post-COVID. So it is an important market, and more important than it was ever before. It is inevitable that more customers will have developed more complex credit profiles post-COVID when previously they were mainstream. So intermediaries cannot afford to ignore cases which land on their desks which do not fit with the mainstream tick box approach. There is huge opportunity out there for brokers to use their expertise and knowledge to serve more customers, reaching out continuously to their existing backbook to identify if customers' circumstances have changed and if there's any way that they can help them. And also, lenders are out there willing to lend. So roll forward and don't roll back. Thank you all very much for your time this morning. I hope you found it useful. Please look out for our next webinar led by our Head of Sales, Ryan Brailsford. Goodbye.